What's going on, everybody? Today we're going to be discussing the difference between term and whole life insurance. Make sure you tune in throughout the entire video because this is going to be a simple and easy to understand illustration of the difference between the two. At the end, we're going to go through a quiz to see exactly how much you've learned. I hope you enjoyed this video. Make sure you like, comment, and subscribe below. Today we're going to be looking at the difference between term and whole life insurance. Most of the time, when people first encounter life insurance, it's through their job. That insurance is typically term insurance, so it's going to be with you while you're on the job. However, sometimes, most of the time, that insurance is going to either expire or you're going to have to then pay the rate you are when you leave your job. Let's look at term insurance through the lens of a house. Now, typically your term policies are going to be sold in blocks of 10, 20, and 30-year periods. After that period, you could typically renew your life insurance and continue on with your coverage, or you can reevaluate where you are, maybe lower the coverage down, or cancel it because there's no longer a need for it. So again, we're looking at term insurance through the lens of a house. Term insurance is typically used to protect things like your mortgage, your income, and maybe college tuition. The reason why we get term insurance is protect things like your mortgage, your paycheck, and college tuition. But eventually the kids are going to move out of the house, they're going to go to school, your mortgage is going to be paid off, and then eventually you're not going to be working anymore. So that's why term insurance is sold in a 10-year, a 20-year, and a 30-year period. Eventually, there's not going to be a need for that huge term insurance policy of $100,000 or $1 million of coverage. So what then do we do? This is where whole life might come into the picture. So typically, whole life is with you for your whole life. Policies like this are going to build cash value that you could borrow against if you need some money. And they're also going to provide your beneficiary a tax-free death benefit when that time comes. Now, these policies typically cost a lot more than your term life insurance policies. Reason being is, as long as you're making your monthly payments, eventually, since it's a whole life insurance policy, it lasts the rest of your life, the insurance company is going to have to pay out the death benefit. So, for example, let's say we're looking at a 35-year-old male looking for life insurance, and he wanted to get a $100,000 policy. That individual in a term policy might be paying about $20 a month, probably a little bit less. But if we did a whole life policy, that same individual looking for $100,000 might pay 4 or 5 times what it would cost for a term insurance policy. So these policies are a lot more expensive because, again, they last your entire life. They build cash value. The most simplest form of insurance is the term policy. It's going to be sold to you for a period of 10, 20, or 30 years, covering for things like your mortgage, your paycheck, and kids' college tuition. Now, if you don't have any of these debts or these responsibilities, you might look at just a small whole life insurance policy to cover your burial. We call that final expense. We'll talk about it in another video. All right, you know what time it is. It's quiz time. Get your notes out, pay attention. We're going to go over a couple quick questions to see if you can explain the difference between term and whole life. Question number 1, which policy lasts forever? Is it A, whole life, or B, term? If you guessed A, whole life, then you're absolutely right. On to question number 2. Which policy is typically used to protect your mortgage? Is it A, whole life, or B, term? If you guessed B, term insurance, then you're absolutely right. Reason being is term insurance is sold on a 10, 20, or 30-year block. So your mortgage should be paid off in 10, 20, or 30 years, depending on how long ago you got it. Whole life insurance would be way too expensive to use as protection for your mortgage. Question number 3, which policy costs less? Is it A, whole life insurance, or B, term insurance? If you guessed B, then you're absolutely right. If you remember just a while ago, we discussed that whole life insurance typically costs 4 to 10 times the amount in premium for the same coverage that term insurance would cover you for. Question number 4, our last and final question. Which policy is better? Is it A, whole life, or B, term insurance? All right, so this was a trick question. In reality, both policies are great options. However, different people are going to use their insurance differently. So what I want you to do is check out some of the other videos below, like, comment, subscribe, and we'll be answering which policy is better for you in an upcoming video. Until then, I'm Brent Lake with Providence Safeguard. Bye for now.